Let's go. Hey, good morning. Welcome to the Forex.Today YouTube channel. Muchas gracias. Thank you for being a client. Thank you of Trader's Way. Thank you for being a subscriber of Forex.Today. There's Trader's Way. Whoop, 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 whoop. Sorry I'm a little bit late. I couldn't find my phone. Now, I'm not one to lose things, so it turned out I fell out of my pocket in my son's room last night before bedtime, so it happens. But anyways, hey, nice to meet you. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. I do these sessions Monday through Friday here at the Forex.Today YouTube channel, so therefore please subscribe so that when I click start, you're then invited. Pretty simple. I appreciate the likes. Thank you for those. Please remember to do that. Doesn't take that long. Would you just click the little like thing? Great. So what do you want to do today? Dollar pairs, yen pairs, Swissy pairs, gold, oil, stuff like that? Good. Me too. Feel free to ask questions. Get involved. Participation is the rule of the day. Andreas says USD Swiss franc. Yeah, seems reasonable. Yen, gold and dollar. Right on, guys. Sure. Oh, I guess we should point things out. Be interesting if this 21x is dynamic level support, don't you think? Right on, Joe. Yeah, I get lots of reports from you guys that your trading is improving, you're becoming more confident and stuff. That's really cool. So make sure you pay it back by opening an account at TradersWay.com, huh? Yeah, so it's to the 21. It's not really a fib. There's obviously a pivot in there, but it's sort of late in the game type pivot. Jimbo says 4 hour, the 55 looks better. On the 1 hour or 4 hour? This one? The problem with this one, Jimbo, is if it comes off here, so I think what you're saying is you treat this as a roll reversal. The only thing with that is that predicts a double top and then maybe a reversal. Okay, Jimbo? And I don't really want that, but this might be a third week false rally, right? Emil says, I made 2% on my account yesterday thanks to you. So you're going to buy a bottle of wine for my wine cellar? I think it's... I think it's streamlabs.com/Forex.Today. I think is that it? Does that work? I don't think I can click on it. No, I can't click on it because it's going to embed. Anyways. Red. Cabernet Sauvignon is a good go-to. you buy something from that store. All right. So I don't even know if that works. Let me see if that works. I'll repeat what I said a day or two ago. Let's see if that's right. Stream Labs. Oops, Labs. Yeah. I think that's it. Yeah. See? It doesn't actually buy that cigar cutter, it just sends the money. So what I'll do is, if you do that, what I'll do is I'll get a name tag, and I'll put it right on the bottle that the bottle came from you. So 10 years from now or whenever, I will open it up. I'll say it came from Emil. We'll open it up and I'll toast it and share it with my friends and my family 10 years from in the future. All right. So that makes it fun, I think. Where should we go? Gold, just kind of moving down closer to our support level. Okay. Do you feel like a dire need to trade this? I prefer to say, you know what? It's not at my price. Okay, not a lot to say there. Sometimes there's not a lot to do. Remember that sell zone? Remember doing all of this? Lower low, lower high. Look at that. Beautiful, huh? So it dropped from 115 to 113.5. So 150 pip moves just since we did this trade. That's nice, right? I mean, I took the time. I even wrote it. Right? Like, I put some effort in this one, right? Picasso, yeah. So, but nothing really to add to that now. There isn't good price action one way or the other. Nice, okay. Maybe just wait. How about this one? This is getting interesting, right? So I thought about this yesterday, but I'll do it now just because I didn't do it yesterday. I'm wondering if I should let it do this. Because that's the real resistance, right? So one thing I was talking about with my wife this morning, if you don't mind me getting personal, I said to my wife, so the Fed is data dependent. And she looks up at me and says, uh-huh. I said, well, with the government shutdown, we're going to lack data. So can a Fed that's data dependent raise interest rates when they don't have data? So she kissed me right on the lips and said, "I love you. You're such a romantic. You drive me wild." I'm like, honey, not here. Not at breakfast, right? All right. Some of that was true. Yeah, so can a Fed that's data dependent raise interest rates when there's no data? You beautiful genius. Your mind just makes me so hot. Yeah. So anyways, I think it might be interesting, right? Well, we've missed a couple of reports already. So, you know, it may start getting in the way. So I think it's interesting. Someone says here, maybe riding the 21. Yeah, could be. It's also just a basic swing. That's what this was, if you recall. And I do prefer it going up than down, but yeah. Sure, maybe. I loved it at 44. Doesn't mean I need to buy it at 54. That's all. How about this? Are you going to play this range? Are you not going to play the range? Like, you could probably have it marked like this at the moment. Seems fair, doesn't it? So this would mean the stock market is falling. Do you think the stock market's going to fall? They said it's been the best, 3 weeks since August? Yes, I do want a case, Lindsay. That'd be wonderful. And I'll label it coffee. See, every time someone comes in the wine cellar, they're looking at all this, and then they'll see 12 bottles over here labeled coffee. Like, why'd you label your wine coffee? I'll say, oh, that's my good friend, Lindsay. Let me tell you the story. Well, there'll always be a story of why I labeled my wine coffee. Yeah, Jimbo, after the worst decline 10 years. Yeah, well, cool. So we'll see, like, what if this was a bit of a false rally? Where's my drawing tool? I don't have my drawing tool on. What if it's a bit of a false rally and next week it comes down? It doesn't have to be a crash. But we haven't fully recovered the October high, right? So what if we had this in the stock market and then this sort of a recovery, and then we start doing this? Right? 1,000 times short. Yeah, well, it's very plausible. Remember, we called the third week of January a false rally. So that would indicate in the next week or two another decline. Okay. You know what, Michael? I don't think that is the case anymore. So you're talking back old school. You're talking, what are you talking, 10 years ago? But I used to be able to call a turn in the S&P 500 based on a pivot point on the euro yen. It's unbelievable, but it's true. Yeah, Joe said yesterday the stock market rallied on gossip. Yeah. But at least it wanted to rally. Okay. Now, you may recall several conversations that I had where we talked about the end of the year being a time when professional money managers take profit because their portfolios are not mark to market, which means if you bought Apple and it's up $50 a share, the $50 isn't in your account. It's just virtual money. Like if you cashed out, you would have the extra $50 plus the money you initially bought the stock with because you actually had to cash out. And that's what sucks about the stock market. You have to sell out just to get your profit, but now you're out. Where Forex pays you your profit even if you're not out. You're right. You're not right. So because we're mark to market. So the stock market's not mark to market. It's paper. It's play money. It's potential profit. So at the end of the year, very often, professional money managers they get rid of their losing trades because you don't want to be in your losing trades anymore. It's time to go to cash. And you also get out of your losing trades because you also get out of a lot of your winning trades. And you have to offset those wins for tax purposes. You offset it with some of your losers, right? But there's also, in money management, there's usually covenants in your portfolio that say things like you cannot own, let's say no investment in your portfolio should be more than 10% of the portfolio. So another way of saying it is if you have a $10 million portfolio, you can't own more than $1 million worth of Apple, no matter how much you like it, because if you buy too much Apple, you're not diversified. But if Apple goes up $50 and you bought it at 100, right? Now you have this problem because you have too much Apple. So you have to sell 30% of your Apple. You see what I mean? And so you're forced to do this, and it's called rebalancing, right? So professional institutional money managers have to, rebalance. And the end of the year is a great time for these big portfolios to do it. But also they have to get back in, don't they? So they buy in the new year. And very often what they'll do is they'll get out of their losing trades in December and then get out of their winning trades in January and then regroup and buy back at some point. And that's why you see these big rallies. It's the same people that sold in December. They just bought it back in January. You see what I mean? So I think we'll have another round of up and down for kind of the same reasons. And then probably nothing happened for a while, which I'm okay with. But look at this USD CAD. 1, 2, 3, 4, 5, 6, 7, 8 days of essentially nothing. So what do you want to do? You want to play it or do you want to ignore it? Okay. This one's through its supportive range. How do you want to play that? Okay. Classic price action has already taken its course. This is supposed to create a lower low. It hasn't yet. Just looking. Right on, Michael. You gonna buy a bottle of wine? Put it in my cellar? All right. Let's take a look at dollar pairs. Yeah, pretty quiet day today. Didn't quite get enough sleep. Okay. This reminds me, swing trading group, we're going to meet at noon today. This is a buy zone. This is a take profit zone. Isn't that nice? Cool. You can do that, right? If you were the expert, if all you could do is buy USD yen, you weren't allowed to sell, you weren't allowed to look at any other currency pairs, all you did all day was USD yen buy. Do you think you could do this? Buy, 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 take profit. No, I did not. No, I did not play golf yesterday. Dog's doing better. Thank you, Tate. Cool. And I ran so far away. What do you think? This is supposed to make one more trip south. That's the target. Red, Jimbo. What I'll probably do, right, so you buy something off that website, it just sends me the money. So you send me 60 bucks, I'll probably go buy a good bottle of French Chateauneuf de Pape. I really like the strong French wines with the Grenache in the blend. And then I'll label it with your name on it and the date. So it'll be a really nice bottle, and I'll put it in the cellar, and I'll literally leave it for 10 years. And in the future, I'll toast to you and your success. EU says, how do you identify a buy or sell zone when you are about to trade? Oh, well, that's easy. Like, the trading's the easiest part, right? So it's deciding what you want to do. But like pivot points, right? Like, so this is what I tell you you need, okay? Price action and pivot points, okay? Those two things tell me entries and exits. Oh, well, there's a group, it's called Day Trading and Swing Trading with Performance Coaching. That's the one you want. It basically gives you everything. A day trading group, swing trading group, a personal coach to work with you one-on-one, and most, if not all, of the video courses. So the swing trading group, the swing trading course, the day trading course, the price action course, the MT4 course, I mean, pretty much everything, I think. What is a front run? A front run is a trade you set up before it's happened. So I'm looking at data, or I'm setting things up in the future. So like a typical trade is like saying that we're at a double top, so we should short or maybe look for the lower low, lower high, and then short. So it's sort of like in the moment or after the fact. A front run is like you're here and you're anticipating the higher high. We talk about it a day or two in advance. And it's, you know, it's being down here talking about the sell being here or whatever. In this case, it wouldn't have been that way. It would have been, you know, you're in here and you say you're gonna front run a downward move off of that monthly pivot. Okay, and this would be the key price, not actually the double top. Okay, but you're talking about it before it's happened. So in this case, you're in December setting up your January trade. And you're in the trade before it happens. That's the front run. So you get in here, and then once the rest of the market figures it out, they follow and they keep adding on to you, right? They keep adding on. So you're basically riding a wave. Think of it as surfing. You have to drop in front of the wave, and the wave picks you up after you've already dropped in. So you're in front. And the wave carries you. So EU Prodigy, going back to EU Prodigy's question, it's price action and pivot points. So like this is what I need. This is the most important thing, right? That I can. This is everything I need. Price action, things like double tops, support and resistance, right? These things are important to me. And then pivot points, because, right, they're also a leading indicator. Okay? So for example, if I thought there was going to be a retracement, right, I would look for something like this, and it's a combination of pivot point, so that's a weekly swing, into the into resistance this way. Okay, and then we would head down to that 13 that I already explained, right? So that to me that's the easiest. If you've already had a bias decide, like if this is South African Rand, right? So if I said I want to buy South African Rand, then the rest is fairly easy. Right? So like in December, if we were talking about a change where the Rand is going to rally in January, I would start by doing analysis and say, well, this is the most important bearish pivot point. Not this one, right? Not this one, not the one above it. The most important bearish pivot point is this. And we would have known that in December, so we would be setting this up. Okay? Ahead of time with the leading indicator. Now, if you didn't have a bias, it would take you a while to figure out it's truly reversed. Okay, so you need to filter everything with your bias, okay? And then it gets easier. Yeah, right on. So like when, in terms of front running, I will meet with the swing trading group today and we will look for next week's trades. Some people will take those trades today. So they'll buy something or sell something on Friday in anticipation of it starting to work out Monday or Tuesday, and they'll probably take profit Wednesday or Thursday. You see what I mean? So they're already looking 1 or 2 trading days ahead. They're already setting up next week, where, of course, newer traders or amateur traders, they walk in the market and they're like, hey, so what's going on? Hey, is everyone selling today? What's going on? What's going on? Whoa, I guess we're selling today. Yeah, okay. Let's look at that big red candle. I guess I'll sell. Right? I guess we're selling today. Woo! Yeah. Must be frightening to trade like that, huh? You want to look at gold? We'll look at gold on the other chart. We can do it here if you want. Yeah, if you're going to trade this like a range, but remember the way to trade the range, the way I prefer the range, I mean, there's 2 ways. I should say it that way. One way to trade the range is, you buy the low, you sell the high, you buy the low, you sell the high. Okay? You have every right to do that because it's a range. And that's where you should use your stochastics or your RSI or whatever. Okay, use your oscillators in that sense. What I prefer to do is let it break significantly and pull back and then trade, or let it break significantly, pull back, right, and then trade. So very often I just ignore it. Comms, go to fxbootcamp.com and find out. And I ran. So anyway, so I'm not that impressed with gold, but it's tradable. I'm just not overly excited about it. Let's go back to dollar. Oh, look at this. Here's ZAR on a different chart. I've already done it for you. Haha, you're welcome. Sorry, forgot about that one. USD CAD, already did that. Euro dollar. Nice. Thank you. Thank you, Sloth. Thank you, Crypto Rage. Thank you, Hadi, for subscribing. Yeah. What do you want to do with this? I mean, someone, what? Okay, let's say that's what you were thinking. Ronaldo, thank you for subscribing. The problem is this is in our face as resistance, right? So you kind of have to be brave or stupid, one or the other, and try to trade this north if you're a bull. And you'll probably convince yourself, you'll do a Fibonacci, and you'll say, oh, it's a 618 and all that kind of stuff, or a 786. Arjun, thank you for subscribing. Okay, but I think what you should do is kind of let it break and then take it. Okay. Right, because I wouldn't be shocked if it does one of these things. Okay, I'm not convinced by this. Okay, I think it should fall a little further, and then a bull would buy it as a bottom, not as a retracement. There's a difference, right? So that means it basically drops on Monday, and then we counter trend trade it this way. Okay. So if that happened, there's two counter trend trading setups in the training course, in the swing trading course. That would be one of them. So basically an out of position and then a counter trade is how Monday would go down. What's up, Pharaoh? Been trading? Yeah. Oh, someone said it looks bullish on the daily. It does. I wouldn't agree with that yet. Okay. That didn't work out. What was that? That was weird. Let's do it this way then. Okay. I still think this looks like the better buy. Okay, and you say it looks bullish on the daily, but I would have to disagree with that. Currently, you're below the 5, the 55, the 21. No, I wouldn't say it's bullish. I mean, you could do it, but like I said, you either have to be brave or stupid. A bullish swing looks like this for next week. And you could do it. You could argue this is the support. Okay, that's all fine. Okay, and if we open next week like this, then you have that setup. But why do it now when I think it's very less certain? So like if Monday opened this way, I know exactly what to do. Ciao, got it, done. 3 points, nothing but net. Okay, doing it now, it's like a half-court throw. Like it might go in. But you have, right? The probabilities are quite different between here and here, especially after a high. Okay? So until that happens, I think what I'll do is let it kind of drop to the next level of support. And now I get my counter trend trade. And that gets me basically this in the next period, right? And then this the period after. Okay. So in this case, plan A is just let it fall so I can buy it. Or plan B is let it rise and then fall so I can buy it. I see your plan C. You could buy it, and you could argue that this is a Fibonacci, okay? And you could argue that this is support. Okay, that's fine. I don't think it's a beautiful setup, but if you're a bull, that might be your plan A, and this would be your plan B, okay? That's okay, too. It's prerogative, okay? Just mine's better. Whoop, just, okay, with all due respect. Yeah. Yeah, I would not buy into long and medium term moving averages. That's not bullish to me. I can see your argument, but I'm not ready to be a bull yet. Okay. We'll see. I either need a better price or I need someone else to take the risk. Yes. As Abu, the US dollar in that case is likely to strengthen. So watch like, in that case, you might get like a flattening of the yield curve. You'd get a bond market rally. Yields would fall. So the dollar index is basically 618, right? So it'll be interesting to see what happens to the Dixie. Okay. So that might be interesting. So if dollar index goes up, the dollar gets strong relative to everything. Alejandro wants to do the CAD news? Sure. Oh my gosh, I'm so tired today. About 3.5 minutes, I guess, to the news. Yeah. Yeah, well, Mr. T, they don't know, right? And even if they're not even supposed to say so, even if they did know, their job is to bring in an expert. What time is it? What? Keep an eye on the clock. That's awesome, Frey. Oscar Mike. Okay, what should you be looking for? Let's do it this way. Trying to get this set. So where are we supposed to go? So anyways, their Canadian core inflation is 1.7. Headline is 2. So good news for Canada. But where are we supposed to go? What do we already know? Yeah, Frey, why don't you, when you're doing your due diligence, why don't you consider Trader's Way? Give us an opportunity to earn your business, huh? What does swing trading tell you? See, this messes it up. I'm trying to get there without that in the way. Okay? This bottom predicts this top. So if you're a swing trader, you already know this. So in this case, you're like, oh, good, game on. Cool, right? So now right, let's check this one out. And this is just sideways. Dead horse. You can't beat a dead horse. You can't beat a dead horse. This is a big blah, blah, blah. Big nothing. Wonder if you go to dailies. So if you're doing day trading, right, that's a sell, and this is your target. Okay. Well, there's lots of things going on with CAD, but yes, Canada is a big exporter of not just oil, but gold and wheat and timber and beef and diamonds and nickel and copper and just all kinds of things. So it's a big macro play for sure. And much of that goes to the United States. So like if you're a day trader, for example, and you flip a coin in, you're a bear. Okay, you're a bear. Okay, let's go back. This is a sell zone. This is your target. This is your sell zone. And you did not hit your target because your target's down here. This is a sell zone, but you can see it never set up, never even gave you a chance. And this is a sell zone. And this is your target. See? You're doing something to complicate things, aren't you? If I were me, I would ponder that question over the weekend. Are you making this more complicated than it really is? So we like to tell ourselves this is super complicated. This is crazy complicated. And part of that is because we were taught as a young child that, mommy would pat you on the head or give you a big hug and say, "Oh, my little boy, my little Kenneth, you're so smart. You're such a smart little boy," and it feels so good, right? So then we go around and we start doing complicated things so we can get more hugs. Look at me, mommy. Look at this thing that I'm doing. Look at me, right? Look how smart I am. Look how complicated. Oh, another hug, right? We get addicted to this stuff and we go through life making things complicated. We've been trained to do that. But I'm just throwing that out there. It's just a random thing. If I happen to be a bear, that's just basic day trading. They're daily swings, right? It's really basic. And, that was okay. And that was okay. I mean, that just didn't set up. It never set up. You never even had a chance. And then, that's okay. It's okay. It's moving along. Well, the first emperor that united China into one China, I forget his name, but his uncle wanted to be emperor, and the boy inherited his empire, right? So anyways, the uncle wanted to kill the boy so that he could be emperor or whatever, right? So he has some assassin supposed to take the boy out in the woods and kill the boy. Well, the assassin has a kind heart, as all Chinese people do. They have a kind heart. So he says, "Hey, I can't kill this boy." So he just leaves the boy in the woods. Doesn't kill him, just leaves a little boy in the woods, to starve to death. So much better, right? Or to be eaten alive by wild animals, whatever. But the kid survives, and turns out he's a tough son of a gun and learns to be smart, right? He's a smart kid. He's a tough kid. So he goes to some other kingdom and grows up there, and then sure enough returns to his kingdom and kills his uncle and starts to unite all of China into one giant kingdom. But I told you that story the other day where I took my daughter's bike. It was almost brand new. Almost brand new, right? Beautiful condition. Gorgeous girl's bike. I took it to donate it. I donated it to charity. And they're like, "We don't want this." Like, it's a brand new bike in amazing condition. So there's going to be some kid somewhere with no money that would love to drive this bike. I mean, I spent good money on this bike. They're like, "Kids don't want bikes. We have so many bikes, we're throwing them away." I said, "Look, just take it. It's free. Just give it away." And he's like, "We don't want it." They don't want it. Kids don't ride bicycles. What? So yeah, compare that to the kid that can survive in the woods by himself with wild animals with no food or water. Yeah, that guy's a tough kid. Right on, Dismate Robin. Robin. Isn't that amazing? Kids don't ride bicycles anymore. I think it's crazy. Do you know, in the United States, 25% of American kids, I think between the ages of 16 and 18. See, when you turn 16, you get your driver's license. So when you're 15, you learn how to drive, and you drive with a parent, and then you take a test, so you have your learner's permit. But when I was a kid, the day you turned 16, you got your car, you got wheels, and it was a massive day, right? Boom! 25% of 16 and 18-year-olds drive a car. I think it's very interesting. There are interesting socio-economic questions. Some of it had to do with the financial crisis because young people back in 2008, 2009, 2010 couldn't get a job, so they didn't save up money. And then, of course, if you were like graduating from college and couldn't get a job, and then you got sort of any job you could get, 10 years has passed and you're still not on the path that you thought you'd be on, or maybe you're just starting your true career. So you went a year or two without a job, and then you went a year or two with like sort of a kind of a crappy job, not really in your line of work, but it was something. And then you kind of got an entry level into your field, but it wasn't right. And now you just kind of get your first real entry into the career you went to college for, but you've lost 10 years. But see, this matters to an economist because when you're between 55 and 65, this is where you're making bank, right? This is the top of your career, the big amount of money, and most of that money, like you already own your own house and you already own all this stuff. So you save all that money because at 65 you're going to retire. So you save. But the problem is, people that graduated, let's say 2009, and basically lost 10 years, and they're just starting their career now, their peak money earning period will start when they're 65, not 55. So let's say, the top 1% make 350,000? So let's say you're making $300,000 a year when you're 55. To 65, you're supposed to make about $3 million, and you're going to save most of that, right? So let's say $1 million in taxes, $2 million into your retirement account. You already own your own home. You already done all this, so you don't need to spend much, right? So you focus on putting $2 million in the bank. Great, and that's what you retire on. Great, that's how it works. And then you sell your house for $1 million profit, so now you retire on $3 million. You're 65, you got $3 million cash, and you need to ride it out before you die. That's how it works, right? But what if you don't have the $2 million? Well, these guys are going to have to work till they're 75. And it's a really interesting thing when you study the socio-economic impact of things, right? And so one of the things is young people don't know how to drive, or they know how to drive, but they still live in mom and dad's house, or they have roommates. They're 30 years old and they have roommates, right? And they can't afford $300 a month in car insurance. And their job isn't that good because they grew up through the financial crisis. So their job's not very good. They don't have a strong resume. They have roommates. They're metrosexual, which is confusing too. Right? It's a tough gig, and it's only money that creates all these problems, right? Back when I was a young man in the dot-com boom, there were lots of people that were like 20 years old, and they were vice president of marketing for dogfood.com. They were making $500,000 a year. They had $5 million in stock options, which eventually, were worthless, but at some point they felt like millionaires. They were managing huge projects, even though they were 20, right? They were doing like, just big marketing projects and stuff. And then the dot-com crisis happened. And then once that recovered, like 2002, 2003, they tried to get a job. By now they're 23 years old, 24 years old, and they try to get a job. And they're like, yeah, so I want to be vice president of marketing. They're like, vice president of marketing? You're like 24 years old, you have 3 years of experience, and you only have had one job in your entire life, and you dropped out of college, so you don't even have a marketing degree. Yeah, well, I'm looking to make, I don't know, 500 to $1 million a year. Like, son, right? How about $30,000 and you can lick stamps and put them on direct mailing envelopes? And it really ruined a lot of people because they were here, but they were not there. You know, they were messed up. They're like, hey, man, I was vice president of marketing for dogfood.com. I used to be a contender, right? But it messed people up. And so then the most recent financial crisis messed a lot of people up too. And it means if you were born on the wrong year, you may work until you die. How does it feel to like retire when you're 75? How long are you going to live? To 85? It's not many years left after 75 in most cases, right? You better fall in love with what you do is all I'm saying. Yeah, tough kids ride bikes. Amazing, huh? Sad truth. Well, I wrote a piece in, do I even have that book? I wrote a piece, I think it was this one. Let me get this book. Oh, does anybody have this book? Sorry, I don't have the actual copy. Do you know any of these people? Here, let's full web. All right, so now I can see it. Does anyone have this book, The Wiley Trading Guide? Do you know any of these people? Daryl Guppy, maybe? You know any of these guys? Who's it? I thought there was one other guy that was a big name. Can't remember. So anyways, I'm the one in the middle. No. Yeah, I wrote it 10 years ago, I guess. Everything was 10 years ago. That's when you know you're old. But everything was 10 years ago. So my dad's like that. He's like, oh man, that must have been like 20 years ago. I'm like, that was 40 years ago. I'm like, Dad, all right, I'm 45. So if you kind of put these things together, like that was 40 years ago. Oh, yeah. So in that one, I wrote about, I forget the exact topic, but it had to do with not planning and taking responsibility for yourself. And that I said that people are going to be 70 years old working at Starbucks so they can get the health benefits and so that they can show up in the morning, drink their free coffee, and eat yesterday's day-old muffins that we're pulling them out of the garbage and eating them because they didn't take responsibility for their retirement and managing their money. And in this case, being a trader. Like, hey, if you're 70 years old, you should be a foreign exchange trader. If you're a retired business person, imagine Forex is a small business you can manage out of your house with no accounts receivable, no accounts payable, no payroll, right? No workers' comp, no lots of stuff. Just clicking buttons and making money. So, well, this requires certain levels of skill. You're going to need to know macroeconomics. You're going to need to know technical analysis. And you're going to have to be able to sit down every single day, analyze the market, put things together, come up with trade plans, and take risk and manage risk. That's all it is. Yeah, no, nobody likes Starbucks coffee. I've never heard anyone go, damn, this is some good coffee. Thank you, Starbucks. Although I get the special reserve stuff when I'm there and it's adequate. But what are you going to do? I have a Starbucks mug, and I was telling my daughter, because my kids are just old enough now where now you can tell them stories and they get it. And I was telling her, I said, back when Starbucks was only in Seattle, I was in Seattle on a cold, rainy night, if you can believe that. It was a cold, rainy night in Seattle in I could probably guess what year it was. 1994. 3, 4. Somewhere between 1993 and 1994. Cold, wet night, Seattle. And I go into the original Starbucks. And I walk in there, and it's getting pretty late. There's hardly anybody in the place. And I'm standing in line to get a coffee. And there's a crazy old homeless woman sitting in the corner by the window. No one wants to be near her because, she's homeless. And she's only in there because it's raining. Right? So I bought a cup of coffee. I walked over. I gave it to her, but I sat down and I talked to her for about 45 minutes. We had a conversation. And then the rain had stopped and it was getting late and the kids were mopping up. So it was, time to leave. So she gets up and leaves and I go use the bathroom and stuff and I'm getting ready to leave. And the kids from the Starbucks show up. They're like, that was the nicest thing we'd ever seen. And me and the employees, we spent our tip money and we bought you this Starbucks mug with our tips and with our employee discount. But here's a Starbucks coffee mug. And I still have that today. Oh, I don't remember the conversation, but I usually have pretty interesting conversations. I'm not very good with idle chit-chat, but, I'll talk, like last night, I'm tucking my daughter in and we had a conversation about nuclear holocaust. And my son and I, what did we talk about? Hydroponics. Tomorrow it could be Alexander the Great. Who knows? But anyways. Yeah, but, that was me in 1993, right? By 1995, I ran a company of 3,000 people and sat on a board of directors with George Soros and Vice President Arthur Anderson, Vice President General Electric, a representative of the United Nations. But besides that, how old is he? Double digits. You want me to do pound yen again? Okay. Never gets old. Sure, Ashley. Yeah. I shouldn't make fun. Every time I hear snow now, I always think of the bastard son of Ned Stark. So anyway, sorry. Yeah, I got thrown off on my own joke. Sorry. You probably hear it all the time, like, oh my God. Yeah, thank you, Wayne. That was so original. Right? Thank you so much. Needed to hear that another time. All right. And what? Whoop, there it is. You might not have known this part, but that's what it makes me stink of. Oh, is that right? Jon Snow, the bastard son of Ned Stark. Never gets old. Never gets old. Never gets old. All right. Game of Thrones, by the way, if you have no idea what I'm talking about. All right. Does your father look like a big crybaby dressed in buffalo skin? Joan, I'm not that much a Joan. My daddy loved me too. So anyways, I want to bring it up on a different chart. We had it somewhere else, so why don't we just go? I think we have it here. That's how the story goes. Yeah, we just finished Unfortunate Events. Where did we have it if it's not there? Maybe it's over in the pound. He's a crybaby without the animal skins, huh? All right. Maybe we have it marked up here. Okay. This is my advice, remember, let it break to the upside and grab the pullback. Well, that worked. That's cool. A little tricky, though. Look at the full Monty, guys. Isn't that great? I think I said this yesterday, so I'm kind of repeating myself, but right? Perfect top, perfect bottom. Somebody's watching this market, right? That's not a random walk, in my opinion. So what do we do now? It's like, does it turn back? Well, this really depends on your bias. Okay, guys? So if you're a bear on this, this is an okay place. You're doing it in reverse order, but that's okay. Okay. So your plan is this next week. Okay. But it's going to do this. Remember? The false rally. The false rally! The false rally of what? Rally? There's an E in there, isn't there? False rally of the 3rd week of January. Right? So if you still subscribe to that school of thought, zippity-doo-dah, it's coming back down, yo. Right? And this would be a great place to start. And if you think you know why that's a good place to start, tell me. I just want to know if you know why. Type in a question mark if you don't know why. No, it has nothing to do with the 200 EMA. Because, well, you have to be more precise and fundamentally. It can go up for a month and still fundamentally be bearish. Hinting at hitting them. Yeah, but more like why, Craig? Yeah, get over there, Jimbo. Oh, is it that late? Yeah, I apologize. I didn't know it was that late. It's because of the February pivot. So if you think February is going to be a bearish month, it needs to fall now. You're welcome. Peace on earth. May the pips be with you. May your profits be above average. I will see you tomorrow. Thank you for being on my team. Please subscribe. Please like. If you want my chart templates, download them. The download link is in the description below. Remember, subscribe and watch all the other videos. There's only, 500 videos on the Forex.Today YouTube channel. Pharaoh got it right. Good job, Pharaoh. And thank you very much for being on my team. I appreciate you. Have a wonderful weekend. Monday's a holiday, I believe. So I'll see you Tuesday. Peace out.